Now in this masterclass, we're going to take a look at a concept that's very important to trading, very important to investing, and that's really the differences between the fundamental and the technical approaches to analysis of markets. So we're going to start off really in here, taking a look at the two different types of analysis and how they break down. So fundamental analysis starts with really, let's take a look at the macroeconomic data. Macroeconomic data is the big data that affects the economy, any domestic economy or the global economy for that matter. So we're looking at data like the unemployment rate, the inflation rate, maybe where interest rates are. We're going to be taking a look at more detailed data, industrial production, manufacturing data in here, GDP data. All these data affect markets in different ways. So that's going to be important. So fundamental analysis will be one thing to be looking at the macroeconomic data and see how it affects markets. So in here, just for a very broad example, we're looking at the weekly ASX 200 chart. And between 2016 to 2018, we've seen a steady rise in this market. And it's really been a reflection of the global economic recovery in here. So the macroeconomic data has been relatively positive, not just for the Australian economy, but for the global economy. Alongside low Australian interest rates, that's helped the ASX 200 push to new multi-year highs in here. So a strong rally for the ASX 200, 2016, 2018, being driven by strong macroeconomic data. Fundamental analysis also includes corporate data. So this is micro data, which we call microeconomics, so smaller data for individual corporates. And here we're looking at this daily Amcor chart. And this was actually the day that Amcor and Bemis announced their deal. So that Amcor Bemis deal in here having a negative impact on the price of Amcor shares. So we saw a significant drop in the price of Amcor shares. So that's corporate data, a corporate event impacting an individual stock. We're also going to look at maybe central bank data, central bank meetings, central bank speakers, and how they can affect the markets. And in here we saw just recently, this was in August 2018, the Reserve Bank of Australia meeting, where a slightly more hawkish tone from the central bank. Rates were left unchanged, but a slightly more hawkish tone from the central bank, from the RBA, has seen a rally in the Australian dollar, because of a perception of potentially at some point higher interest rates. So the Australian dollar going higher, reacting to the central bank event. And then finally, we're going to look at geopolitical risk in here. So outside stochastic risks that can affect markets on a geopolitical front. And here we're going to look at the daily LME copper 3-month forward chart. And in this copper chart in here, you've seen this big sell-off that we saw June, July through into August of this year, of 2018 in this case. And that's been driven by global trade war concerns. So a bigger picture geopolitical concern of a global trade war impacting on the price of copper. Now we're going to look at a brief look at technical analysis. We will go into far more depth on technical analysis on various other masterclasses in this series. But in here, the basic principles of technical analysis are not looking at those macroeconomic events. They're not looking at geopolitical events. It's not looking at the data. It's not looking at the central bank. The price discounts everything. This is one of the basic principles of technical analysis. So technical analysis is looking at the chart, looking at the price chart and making a decision on future price move based on the price chart, because the idea is that the price discounts everything, all the macroeconomic data, all the geopolitical risk, all the geopolitical events, all the central bank information that we have on the markets, all the individual corporate data is all built into the current price. So the price has discounted everything we can know currently about the situation of any asset class. The second basic principle or tenet of technical analysis is that price moves in trends. So we're looking for trends to form and markets to move from one equilibrium going into a disequilibrium, and then they trend between one equilibrium and through disequilibrium to a new equilibrium point. And that's when we get a trend, a price trend in markets. And then the final real significant headline kind of principle of technical analysis is that history repeats itself. The moves in price, these trends in price, are being driven by market participants buying and selling various asset classes. Those drivers of those individuals as a mass psychology is all being driven by emotional factors, and those emotional factors, those emotions, and those principally fear and greed, those emotional factors are the same over time. Market individuals and the market as a whole reacts to similar events in similar ways throughout history. So history repeats itself. So in here we've taken a look at the basics of fundamentals versus technical analysis. Remember, the fundamentals looking at macroeconomic data, microeconomic corporate data, geopolitical events and central bank risk, where technical analysis is very much looking at price action. And we will take a look more at technical analysis, as I say, in other masterclasses in this series. This has been Steve Miley for The Bull, and please do join us again on thebull.com.au and thebull.asia. Stay bullish.